Hello everyone, I'm Ted Oakley. I'm managing partner of Oxbow here, and I wanted today to introduce you to someone that is one of my favorites in the merger acquisition business that represents sellers and buyers. It's Dwayne Donner. Dwayne has been an entrepreneur himself, which I think makes a lot of difference for people that are considering selling their business. And one of the things I've found a lot about Wall Street is you have a lot of people that never have been on the block and they don't really understand what's happening. But he's been in the trenches himself, and he's been doing this for a long time, represents people all over the U.S. And he's CEO and founder of Founders, and I'm glad to have you here, Dwayne. Glad to have you here today.
Thank you, Ted. I appreciate the opportunity to be with you.
I wanted to start off, and I'll get right to it. I've been talking to business owners for really for 35 years, 36 years almost. And a lot of things never change. I think you'd agree, like the things don't change. But one of the things that does change is sort of the atmosphere of from time to time. It can be feast or famine. But how do you see the merger acquisition landscape today?
Yeah, great question. Like you said, I mean, I've been doing deals, mainly representing sellers for over 20 years. And, I've kind of seen this industry really grow and propagate over the years, obviously with all the private equity. And I will tell you, again, this current environment's a little bit strange, but the valuations, and again, most of the time business owners are looking, okay, what is my company worth? That's a big part of what we do. And I would say overall, the valuations remain very strong. And that's, historically over the last kind of relative to the past, I think about the last 5 or 6 years, we've been in a very strong market. And we're seeing, it's a little tougher to get deals done right now because of some of the implications of COVID and just, the banks and so forth, but when we're getting deals done, we're getting them done pretty much at full valuations, and those valuations are really good relative to history.
That brings up my second question to you, Dwayne, and that is, it looks as though to me, and I've been around this industry a long time, and I've seen some prices that were really great prices, but I don't think I've ever seen any prices any better than I've seen the last few years. What do you think about that?
No, I fully agree with that. I mean, we're pleasantly surprised, again, with the consistency of valuations on companies relative to history. And again, that's driven by several things and fundamentals that you're very aware of. First and foremost, there's just a tremendous demand for good companies. So, I mean, if you have a good middle market company, or lower middle market, and we define most of the deals we're doing are kind of in that, $20 to $100 million range. We have a couple larger than that, but most of them are in that kind of, we call that the lower middle market. And there's just a tremendous amount of demand for good companies in that space because of the amount of capital in these private equity funds and even strategic buyers that are trying to deploy money. And then the second big thing is, again, we've continued to have lower interest environments that makes capital very cheap or relatively cheap, which allows people to leverage money, and it just creates a lot of demand, really. And of course, it's a supply and demand, equation, and that's good for a seller in today's market.
And Dwayne, the multiples I'm seeing on pre-tax today are just something in some businesses that I really never thought I would see. They're so much larger than I thought. And if there's people that are considering selling their business watching this today, you need to really think about that. I'm not certain that'll stay here forever, but don't you see those multiples higher than you've probably seen in your career?
Yeah, I mean, on average, and again, I've got this report we buy from GF Data, which again tracks all these deals. And, when you look at it over, quarters and years, I mean, generally companies are trading today at about a turn of even on an apple to apples basis, about a turn of EBITDA multiple higher than they would have traded, even, I'm looking at this data right now, even in, 2018, 19, which were great markets. There's just a continual, again, push for that. So to your point, I mean, the law of economics too says, things, if it goes up, it's going to go down. There's going to be a cycle. And, it doesn't seem like it can last forever. Of course, some of the things we're seeing right now from sellers, as you're aware of, and you may even want to talk about, is some of the concerns about potential, depending on the political environment, some potential issues with tax, change, which can really impact, what you take home. Because it's one thing to get a high value for your company. It's another thing, well, what is your take home after tax that you can, go put to work?
It's interesting you say that, because my next question had to do with timing of selling, the timing of selling. And I've mentioned this. We put out different pieces over the last couple of years. But over this last 2-year period, the timing of selling is getting more and more and more critical. And so you might speak to that not in terms of two things. One, not only on the tech side and what could happen that would be a totally different. If you look at what could happen on capital gains, for example, next year, if we have a change in the White House, it's double what it is this year. And so people need to keep that in. But also in timing of selling is, think about if you miss this window, if you'll talk about that, you may have to wait till another cycle.
Sure. And I mean, we are in a weird environment, as you know, and I was talking to, we've been talking to a lot of, we have, I think, about 28 deals in market right now. And so we're always talking to business owners and trying to understand where their business is headed. Because, doing a deal has a lot to do with the future. And one of the things, we talk a lot about timing. In fact, I tell people all the time, there's 3 things that are most important in business. I learned this a long time ago from a business mentor. And those 3 things are timing, and you need a little bit of luck too. But when it comes to deals, timing is the most important thing. And we look at timing kind of internally and externally. Of course, there's a timing relative to your business and how your business, where you are in your business life cycle. And there's a lot of things to consider there. I mean, the maturity of your business, the where you are as, in your personal life in terms of your age, your management team. There's a lot of things to study internally. And normally we want to try to align the internal timing with what's going on in the market. Of course, the external timing factors include things like, the broader capital markets, which we're talked about, which are very strong right now. And that is led by, and you know this better than anybody, by, the public markets are really a proxy to the private markets. They're a function of one another. Those things are really trading at all-time highs right now. And then, of course, you take into consideration what's going on in your industry. There's certain industries right now that are really struggling, like, oil and gas related industries where, and again, this is a great example. And you've seen as you live in Texas, we have 2 offices in Texas. We've done a lot in the oil and gas industry. I grew up in it. We had guys that had built great companies and they missed the window, and they had tremendous opportunity, but they thought it was going to get better and better and better. They missed the window, and literally they went from having companies that were, in many cases, worth hundreds of millions of dollars to really not even being able to find a deal for their businesses because the environment changed and they missed the timing window. And so it's just so important to really assess that timing and try to understand it. It's what we spend most of our time with companies trying to do, help them understand the timing, both internally and externally, and trying to pick the window. And the biggest thing, and I know you talk about this in your books, you got some great books, I've read most of them, is making sure you're ready, because being ready is the most important thing.
And that was one of the things I wanted to ask you about, a couple of mindsets. And I know you've seen them all the mindsets of these people that are going to sell businesses. And I'm reminded of a line in the Fiddler on the Roof movie, which goes way back, was entitled, was said, well, since they're rich, they must know, which has never been more untrue, because a lot of people in businesses that have done really well, and you know this, they have these different mindsets. Ego gets into play on it, and there's a spot here. I was going to ask you about 2 or 3 different situations and how you might approach them, but I'm going to take the first one. which is a business owner that's done really well. He's got a business worth $65, $75 million, $100 million today. And obviously that person has a big ego. No matter whether they say they do or not, they have it, okay? And they're very humble in a lot of cases, but they've got an ego. And I'm sure you bumped into that. It's time to sell your business and you need to listen up. Do you run into that?
Yeah, we do. And, again, as you know, generally it takes a lot of certain types of personalities to build companies. We work with a lot of founder-based companies. So these are can-do kind of people, and they've done a lot of great things. Again, like all of us, we think if we're good at one thing, obviously we should be good at other things. And of course, it takes life to help humble us in those situations. So, yes, we do have a lot of people that think that they can just overcome and it's always going to be better. And of course, most of these guys are optimistic or they would have never started a business, But we really, try to, like you do, to try to gently help them understand that things do cycle. Now, a lot of these guys understand cycles because if you've lived long enough, you understand things go up and down and timing those things matter. And to your point, if you're in your, 50s, approaching your 60s and you've built a great business, and you miss a window, it may be a decade before you see that same window. And so we spend a lot of time trying to help people, educate them just like you do, and encourage them to think about it. And I know you talk a lot about this. The reality is most of these business owners that we come across have the majority of their net worth tied up in an illiquid private company. And, that's not a great asset to have when you're, kind of going into a downturn per se.
Well, and I've seen that. I mean, if you go back in the 80s in the furniture business in North Carolina, if you didn't sell out then, China was going to wipe you out. If you missed that cycle, you were done. I've been through 2 or 3 oil and gas cycles. I've been through industrial cycles. Second thing I was going to ask you, the mindset of a person is when you have a second or third generation owner, which you run into a lot of them,
yeah,
and they're not as good as the first generation. You know it, I know it, everybody knows. They probably actually know it. Do you find that harder to get them to understand that, hey, you need to sell this business? You can't really run it, but it's nothing against you personally, but time to sell it.
Yeah. Yeah, and the truth of the matter, which is great about this market, and again, I know you're very familiar with this because you have a lot of clients that have been through this process. In fact, again, you talk about it in some of your books. There's been no better time in history to have different options. So what we find many times is, you have, your son or daughter in the business, you want to give them a chance. They may not have the skill set, or maybe they're just young, they haven't developed. Well, the beauty is, there's a lot of ways to do deals these days that can allow you to really hedge those bets, take a lot of that money off the table, opposed to just rolling everything forward on the backs of your siblings or your kids, and be able to kind of, give them an opportunity with an owner to play a role, but not necessarily, bet the whole farm on your son or daughter or whoever it is that's the heir apparent to the business. So, yes, we try to help them understand, and we evaluate that and try to give them solutions that can really be a win-win, where you maybe recapitalize the business, take a lot of the money out of the business, keep a little bit in, and let your, some of these folks stay. And by the way, the new owners are going to real quickly determine if they're going to make the cut or not.
That's for sure. I always say this, look, you sold the company. You'll know that the next day.
Right.
And so, and the other, these different mindsets of people, and I know you've seen this example too, where you have a patriarch or a matriarch that's built the business, first generation. They do have children in the business, and they're really caught between, should I let them run it and run the risk of blowing the whole machine up, or should I sell it? And you might comment on that. I'm sure you've seen that a number of times.
Yeah, we have. And again, I think, one of the things that we have the opportunity to do, and you also, is to be a third party, to come in and give people relative understanding. Because lots of times, as you know, they're kind of living in their own little world. And we can come in and give them a lot of understanding and kind of different scenarios and get them comfortable. And we can assess some of these things. And again, it's a lot easier for, I think, somebody who has a third party that comes in and says, hey, this is really what is the best course for your family to, and so you don't have to be the bad guy, and we can kind of be that for you, for the owner. But yes, it's hard, and I mean, again, I have kids and I love them, and and I want the best for them, but sometimes the best thing for them is not what they think is the best thing for them. It's a different thing.
And and I'm not trying to toot your horn here, I'm not, but I bet in most cases, you know what's right for them.
Yeah, well, we've seen a lot. So just like you, when you're doing what you do, which is not what I do, you've seen enough to know, like, well, and again, you don't know what you don't know. So yeah, we have a lot of experience. We're not always 100% right, but we sure have a good voice, and I think can give a lot of good advice on that, in those areas as it relates to transitioning your business, selling your company.
And let me talk to you about this. And this is a personal opinion, but I've been around Wall Street, which I'm not. I have to tell you, I'm not real keen on as a person. I find that people off Wall Street that do things that represent business owners do a much better job of matching them up with the right buyers. And I one of the saddest things for me, Dwayne, I've been around a lot of people that have sold companies in the last 35 years, and one of the things that makes them sad is they really were proud of their business. They were proud of what they had, and a Wall Street group comes along. They didn't care who they sold it to. They just got a price. They blow the business up 2 years later, and this person's like, I did all this, and they ruined it. Don't you find you represent a lot more of the right buyer for the right seller?
Well, I mean, honestly, Ted, just like you, I mean, again, just to kind of take a step back, I mean, our firm is literally, our purpose is to grow leaders and build lasting relationships. We're in a transaction business, but we care a lot about the relationship with our clients and serving them well. And so what we really are trying to do is not just go get a deal done with a buyer at the highest price. Now, we spend a lot of time to build leverage through a process to get the best valuation because, again, they deserve to get a really good value for their business. We got a great market. But really, this is more about understanding the goals and objectives of the business owner and trying to get the right buyer that can achieve their goals. Because there's a lot of things, as you know, in a family business that are important to an owner beyond just the numbers. And some of that is the continuity and the future and the legacy of the business. And there's the beauty of today is literally there are so many different types of buyers. It is almost like getting married. You got to go spend time to find the right folks, date the right people, find the right chemistry, and then pick the right buyer. Now, we don't get that 100% right every time, but through that very exhaustive process, which takes a lot of energy, which is how we get paid, we get it right most of the time. And the outcome for us is what does that business owner feel like 2 years after the deal? That's really what matters to us, not just the day they get the money in the bank.
And the other thing, it's one thing if you're a business owner and you've got one technical piece of information you're selling, a patent or something where there's really not a lot of employees involved. But one of the things we find about business owners is that those 200 people that work for them or whatever, for them, that's also part of their family. They do not want to put those people on the street. And I find that a lot of Wall Street firms just blow in and they're not even thinking about what's going to happen on the other side of the river here.
That's right. And one of the things, again, I want to reiterate, you're right. I mean, a business is like a person. It's a living, breathing thing. It's not like a piece of real estate. It's an organic, living thing that has a lot of soul. And so and everyone's different and unique, as you know. And a lot of them take on the personalities of their, patriarchs or their founders. But again, the beauty of what we do, and of course we've been doing it for a long time, and again, just like what you do, it's all about people. And there are some great people in this business that buy companies. In fact, there's some great firms in Texas. Some of the finest, firms that we work with that buy companies are out of Texas. And again, they're all over the country. We got them, everywhere. But there are some great people in this business, and everybody thinks, well, private equity, they're just a bunch of, whatever, New York, Wall Street, bad people, and there's some bad ones, no doubt. But there's also some great ones, and being part of what you're getting when you hire people like us is knowing who they are and who the good ones are.
Right. And so, in covering that today, and I'm going to wrap up here with just some closing thoughts from you, and we'll have, at the end, we'll have a banner of how they can get in touch with, if they haven't contacted you already, how they could get in contact with your firm, because I know you have a large firm with a lot of people, but they seem to all be grounded in the same mentality, the best I can tell. But I might get you to give me a closing thought here, just in terms, if you were talking to a business owner that has never spoken to you today, but on the verge of maybe thinking about selling the business, about all the things we wrap it up that we talked about timing and what they're paying, etc. Yeah,
sure. Well, I mean, of course, we love meeting business owners just like you do, because that's who we serve. And one of the things that, I'd love to just share with business owners is that, part of our job, in the way we build relationship is to help them understand and get educated on what the market is for their company and what the options are, what their valuations are. So what I would encourage every business owner, whether they work with somebody, our firm or another, is to take time, and it doesn't take a tremendous amount of time, but to have a corporate financial advisor, not somebody who's managing their money. I mean, they need somebody like you, obviously, managing their money, but somebody who understands the market for their business so they can really understand how their business is positioned from a market perspective. I mean, I'm talking about from a market, meaning selling their company, not so much from the market they're serving. And then from there, they can get some general idea of the timing, and are they prepared, and all this. Like everything in life, the better you prepare and the better you're intentional, the better, generally the better the outcome. Now, people get lucky and they hit the right time, they have the right time at the right place, or the right place at the right time, but I think it's just, and so we offer that up. Generally we're willing to go invest time to get to know a company and give them advice to help them understand and get educated. In fact, we have a lot of events where we do that and so forth, just like you do. So that would be my advice to them. In this market we're in, take time to get an understanding and have kind of a game plan in your exit and transition strategy.
And on that note about talking to a professional, which I am totally in agreement on, and one of the things I was going to mention in that to all these business owners that are watching this is, and by the way, this is not a disparaging mark for your accounting people or your legal counsel, but do not, I've seen this happen, and I know you've seen this happen, you have to have, do not let those people really cause a deal to go bad because they're inputting from a standpoint where they do not have the experience for a firm like yours has, for example. And you've probably seen that.
I'm sorry.
You've probably seen that yourself.
Yeah, I mean, look, it takes a team. And what we love to see is these advisors like the CPA and the lawyer, and again, the wealth management advisor, all part of a team to help plan. But again, when you're doing a transaction and going to market, it's a very specialized, service. And it's something many times people only do once. So you really need a quarterback because, again, it's a multi-dimensional, pretty involved project process. So, we've seen many times, somebody who kind of knows a little bit about it get in and try to lead, and it creates a lot of problems. And we like to work with all these guys and have a consolidated team, but make sure you got, somebody who really, that's what they do every day. I mean, that's what we do every day is we take deals to market. Well, and I'm glad that wanted to just, get that in there while we were talking. And wrapping up here, I just want to say to any of you business owners that are looking out there, take a look at timing right now. What's going on in the marketplace would be important. You don't have to sell it necessarily, but you may want to think about taking a look at it and getting with professionals like Dwayne Donner and the Founders Company, because now's the time. I promise you. I've been through this a long time, a lot longer than most people, and now's the time. But Dwayne, I appreciate you being here today, and your thoughts have been great, your comments, and I hope all you business owners out there will enjoy it as well. So Dwayne, thanks for being with us. Thank you, Ted. I really appreciate the time, and I appreciate all you guys doing. Y'all do a great job.
Yeah, thanks a lot.
Thank you.